All right, welcome traders. Welcome to this historic online event. I'm very happy to be here. I want to thank my friends for inviting me to this very historic event. I believe this is actually the very first, if I'm not mistaken, this is the world's very first live continuous 25-hour educational trading expo. That's incredible. 25 hours of uninterrupted trading education from some of the most dynamic and some of the most successful trading instructors in the entire industry. That's very, very powerful. Wait a minute. I'm hearing that. All right, so I hope everything is okay on my end. I hope I'm coming through loudly and clearly. I hope that my image is okay, because I have a very, very dynamic presentation for you today. All right. I just want to make sure before I press forward, I just want to make sure all systems are go. All right. This event is being broadcast in 3 different languages, actually. All right. So I'm speaking English. It is being simultaneously translated in both Portuguese and in Spanish. And virtually everything that I do in the trading space is actually conducted in those 3 different languages. All right. So we're good to go. We're good to go. And guys, I just want to let you know that today's presentation, all right, my talk today is going to be based on locations. I'm going to show you how the concept of where your trade begins has a very powerful impact on the consistency of the success of your trades. A lot of people are always focused on trying to find a good technique, a good tactic, and they spend the vast majority of their trading lives chasing tactics. And tactics and techniques are very important, but a good tactic and technique that is taken in the wrong place, in the wrong location, makes for a very bad tactic and technique. In many respects, where you apply your tactic and technique is more important than the tactic and technique itself. All right, so we're going to talk about locations. We're going to talk about 7 locations in particular, how to play each one of those locations. And these locations are going to give your specific tactics and techniques extra oomph, extra power, extra consistency, and I believe extra success. All right. All right, so without any further ado, let's get started. Now, I do know that we are I'm addressing some people who have absolutely no idea who I am. I do realize that. So for the benefit of those, very quickly, let me go over my history very quickly, I promise. I've been in this industry, traders, for a very long time. I have been trading. I placed my first trade in 1981. I'm sure that's long before many of you were actually born. I became a professional trader on December 6th of 1986, landing my first professional trading job on Wall Street. All right. I spent eight years or so with a very successful career on Wall Street, became relatively known in the industry, and that made me decide to leave Wall Street to start my own professional trading advisory firm. All right, that firm is called Pristine. All right, some people refer to it as pristine.com, and I formed that company in my basement apartment in New York City in 1994. That company would go on to be one of the most recognized and one of the most respected trading organizations in the world. I was known as the father of swing trading. That's right. I created the form or the style of market play that many people today refer to as swing trading. All right. I coined that style all the way back in 1991. And if you were to Google Oliver Velez swing trading, you would see much of my old work dating all the way back to the mid-1990s with this particular style. Barron's, which is one of the most respected periodicals in the entire financial world, ranked me and my company #1 in the United States in 1998. I was the #1 go-to for professional firms and professional traders to come for training and skill building. The Dow Jones, the venerable Dow Jones, well over 100 years, dubbed me the Messiah of trading in 1999, and the industry's largest organization invited me to be the keynote speaker to their inaugural event in 1999 as well as 2000. I'm also the best-selling author of 5 international trading books. These 5 books are written in 5 different languages: English, Spanish, German, Mandarin, Japanese. I have over 10,000 equity and Forex and now cryptocurrency traders. These 10,000 traders are spread over 96 different countries, and I continue to advise and speak for financial organizations globally. All right. And this is very quickly, this is an article written on me when I was chosen to represent the entire trading industry as their figurehead. This is Barron's ranking me and my company #1 in 1998. And this is an image of some of my books that are written in 5 different languages and continue to sell more copies than virtually all trading books combined. Now, before we get into the presentation today, I would love for all of you to follow me, where I am very active on Instagram and put out content absolutely free every single day on my Instagram channel. I do that also on Facebook. And of course, Oliver Velez Trading and Oliver Velez Trading en Espanol in Oliver Velez Brazil. These are my 3 YouTube channels. They're some of the fastest growing YouTube channels in the trading space. And 365 days every single year, I make sure that I put some educational content out to you, right, that will help you take an additional step toward that goal that we all want, that goal toward mastery in our trading. So make sure that you follow me on those channels. Make sure you subscribe and make sure you turn notifications on so that each time, every single day, I come to you with some form of education, you won't miss that education. All right. So let's get started, traders. We're going to talk about locations. Now, very quickly, there is a saying in the United States connected to the real estate market. I'm sure that this is basically universal across the world as well. One of the most important concepts, right? One of the most important concepts in real estate is location. In fact, there's an age-old saying that says there's only 3 ways to make money in the real estate market, and that is #1, location; #2, location; #3, location. And this concept is very important because it applies with the equity markets, it applies with the Forex market, it applies with the futures market, it applies with all markets combined. And so in the real estate world, it doesn't really matter very much what kind of house you have on a great location. If the location is amazing, you can have a broken down shack on that location and it would be worth a lot of money. But conversely, if you had a terrible location and you built a mansion on that location, that mansion would not fetch the value that it would if that mansion was built in a very good location. If we take this concept to trading, it's absolutely the same, traders. It's absolutely the same. If we build our house, if we build our trading plan, our trading tactic, our trading technique on a poor location, even though that technique might be great, the poor location is going to ruin the technique. At the same time, you can get the location right and actually be a little sloppy with your technique, to be not as good with your strategy, but the location will more often than not save you. So in my opinion, location is more important than tactics, more important than techniques, but if you can get them both right, wow. Okay, so let's move on. Just want to make sure I got this right, guys, here. Let's move on. Boom. All right, there are 7 specific locations, and I want to talk about them now. Now, we're going to build these 7 locations based on a concept that I call Fabulous 4. Now, guys, I have used this Fabulous 4 concept, right, to dramatically increase the consistency of traders over the past 6 years or so. This is a concept that came up with about 6 years ago, and it has helped me do wonders with the statistics and the eventual success of scores and scores of traders. It's a concept that I'm so glad I found a way to communicate very clearly, because it helps me to rapidly increase a trader's consistency. Now, we're going to go into what exactly the Fab 4 is, but first, I want to talk about the locations around the Fab 4. I'm going to explain what the Fab 4 is next, but I want you to look at this blue rectangle in the middle of this slide. All right, this rectangle is going to represent the Fab 4, which I'm going to teach you how to construct. But right now, I want you to look at the area right above the Fab 4, right here. This area, that number 1 area, that area just above that Fab 4 block or rectangle is the very best location to buy. Now, what I'm teaching you is going to be applicable to stocks. It's going to be applicable to futures. It's going to be applicable to options. It's going to be applicable to any market in the world. And it's going to be applicable to any time frame in the world. So even if you play a small time frame, like a 2-minute chart or a 5-minute chart, it applies. If you play longer time frames, like a daily chart, it applies. If you play any market in the world, it applies. This is a universal technique across all time frames in all markets. So I need you to understand that. Okay, but this location 1 is the very best and most powerful location to buy whatever it is that you trade. It is the worst location to attempt to bet on something going down. So shorting from position 1 is a losing technique, a losing strategy, a losing move. The only thing we do if a stock or whatever we're trading presents something of value to us in location 1, the only thing we're going to consider to do is buy. Now, a little higher, all right, a little higher than that is location 2. This is not close to the Fabulous 4 block or rectangle, but it's not super far either. See, location 1 is super close. Location 2 is not close, but it's not super far either. Now, in this second location, we're going to look to buy most of the time, but every now and then it's okay to bet on the stock going down. It's okay to bet on a short going down, but it's more okay most of the time to bet on the stock going up. Okay? Every now and then, it's okay to bet on the way down from location 2. But if you're betting on the way down more than you're betting on the way up from location 2, you're going to get yourself in trouble. Okay? So from position 1, check this out. From position 1, we only want to bet up. Okay? Okay? From position 2, we want to bet up most of the time. Let me get my cursor here. All right. We want to bet up most of the time, but every now and then we can bet down. Okay? Now, location 3 is far above the fabulous 4. I'm going to teach you how to construct the fabulous 4, but let's just focus on the locations around the fabulous 4 first. Okay, so we're talking about position 3, far above the fabulous 4. This location, notice how I have 1 plus and 2 minuses, which means that we can think about going long if a powerful event happens way above, but the majority of times in this location, we want to be betting down. It's super far above. It's not on the moon. Your item is not on the moon. It's not on Mars. It's on frickin' Pluto. It's too far above the fabulous 4 to think that there is dramatically more upside. So we must think that a reversal back to the downside from the super lofty 3 position, we must think that there is more potential on the downside than the upside. So in location 1, the greatest potential is to the upside. In position 2, you can bet up and down, but you want to make sure that you're betting up on average more than you're betting down. This is still a bullish location. But if you are in location 3, if your stock is super far above the Fab 4, betting long all the time for more gains is a losing strategy. Every now and then, if something is super powerful, we can still go long there. But the vast majority of our actions in location 3 must be a bet or a short to the downside. Now these are the 3 locations above the Fab 4. Let's talk about the 3 locations below the Fab 4. If your stock, or whatever it is that you're trading, opens for the day or the morning below its Fab 4, but just below its Fab 4, that is the juiciest, that is the most desirable location to bet on a downward movement. We never think about betting on an upward movement from just under the Fab 4. You see, traders, the Fab 4 can either be a bedrock of support. When it's here, the Fab 4 acts as a cushion of support. You see? Boing, boing. But when we are just under the Fab 4 acts as a cloud of resistance. Boing, boing, boing. You see, it's hard. It's not impossible, but it's hard for stocks to penetrate all the way through the Fab 4. That Fab 4, when you're under the Fab 4, is a very thick layer of resistance. When you are above the Fab 4, it's a very thick layer of support. So when we're right under, we never think to buy right into the resistance. we only think right under that the move to the downside is the best. So location 1, we never think long, we only think short, we only bet to the downside, just under that Fab 4. When we are under the Fab 4, we're not close to it, but we're not super far. We're gonna bet to the downside. But every now and then, if something really powerful happens in location 2, we can bet to the upside. Why? Because there's still room back to the Fab 4. You see, there's virtually no room back to the Fab 4 from position 1, but from position 2, there's some room to play to the upside. But on average, you still want the vast majority of your trades betting to the downside. All right? Now I'm going to get to how we build the Fab 4. Just understand this concept of the positions around the Fab 4 first. All right, we're going to get to it, I promise. All right, we're getting to that next. Okay, now, so from just under the Fab 4, we're only going to bet down. From this position, we're going to bet down mostly, but every now and then we're going to bet up. All right? And this is all going to become super clear in just a bit. From position 3, way below the Fab 4, we want to actually bet up most of the time, but every now and then we can bet down if it's very powerful. But why do we want to bet up most of the time from here? Because it's so super far below the Fab 4 that the odds are greater for a reaction back to the Fab 4 than it is to continue to the downside. All right? So we have 3 positions above the Fab 4, 3 positions below the Fab 4, and the final position is in the middle of the Fab 4. Now, whenever your stock is in the middle of the Fab 4, I suggest that you leave it alone. That your stock is trapped. I call this the trap zone. It's trapped in this box. And it will act erratically in this box. We want your stock to be free from the trap, free above or free below. In the Fab 4 is trapped in a cage, and your trading is likely to be very erratic. Now, I understand a lot of people are saying, but Oliver, I'm confused. What's the Fab 4? We're going to get to that right now. But I need you to understand these locations around the Fab 4 first. So now, let's talk specifically about how you build the Fab 4 for every single thing you trade. Ready? Are you ready? This is going to revolutionize your trading. Watch. All right. All right, let's go. Okay, just want to make sure I'm back here. Boom. The Fab 4. Now, the Fabulous 4 is called the Fabulous 4 because it's made up of 4 fabulous items. Item number 1. Whatever item whatever you're trading, we need a 200 period moving average. That's item number 1. A 200 period simple moving average. That I use the simple moving averages. All right. So we take it doesn't matter if you're trading a 2-minute time frame, it's a 200 period moving average of the 2-minute chart. If you're trading a 5-minute time frame, it's the 200 period moving average of the 5-minute chart. If you're trading a daily time frame, it's the 2-minute moving average of the daily time frame. All right, time frames don't matter, whatever time frame you trade. Okay, and this is on all markets. So item 1, we need to find out where is the 200 period moving average on that item. Item number 2, the 20 period moving average. Where is the 20-period moving average on your stock or on the item that you trade? So these are two of the fabulous 4 items we need to note, okay? Item number 3 is that we need to find out where was yesterday's closing price. If you're trading Microsoft, where was yesterday's last closing price? That's item number 3. And then item number 4 will take some explanation from me. We're going to take yesterday's late day price activity. And that late day price activity, we're going to group it together to form item number 4. Okay, so these are the 4 things that make up the fabulous 4. Now, let me go to charts and show you how to put this together. Okay, now we're looking at a 2-minute chart of Pepsi here. I want you to note that this is item number 1 is the 200-period moving average right there. Boom. That's item number 1. Item number 2 is the 20-period moving average. That's item number 2, the 20-period moving average. Boom. We've got 2 of our items now. Item number 3 is yesterday's closing price. Yet this is yesterday and this is today, right? Okay, so yesterday's closing price was right here, represented by that dashed line. That's item number 3. Okay, so got item number 1, the 200, item number 2, the 20, yesterday's closing price. Now, the last item, remember I told you, is yesterday's late day price data. So we're going to go back about 45 minutes to an hour of yesterday's last 45 minutes to an hour, not much more than that, okay? So we're going to come back maybe here. We're going to take the last part of yesterday's data. And you know what we're going to do? We're going to mark the highest price of the last 45 minutes or so. And we're going to take the lowest price of the last 45 minutes or so. And we're going to create a little block. And this becomes item number 4, the last block of data from yesterday is item number 4. Now I'm going to repeat that because that's the one that's a little bit more complex. We're going to take, once again, let me repeat this. We're going to take the last 45 minutes or so of yesterday's data, all right? And we're going to say, what's the highest price that this stock registered in the last 45 minutes? Boom, right there. That's the highest. What's the lowest price the stock registered in the last 45 minutes? Right here. The last 45 minutes. The lowest low of the last 45 minutes. This becomes the stock's late day price zone. Okay? And that zone becomes item number 4. Now, we have our 4 items, the 200, the 20, yesterday's closing price, and yesterday's late day price data. Now, what I need to do is I need to group all 4 of these things into a block. I'm going to take the top of whatever item is the top of the 4. This is the top of my 4 items. This is the bottom of all 4 items. Sometimes the 200 is going to be the bottom of the 4. So which item is the lowest and which item is the highest? Sometimes the highest is going to be your 200. Sometimes the lowest of your 4 items is going to be your 200. Sometimes the lowest is going to be the bottom of 4. Here's the lowest. Sometimes the highest is going to be the top of item 4. Whichever item is the highest is the top of your Fab 4 block. Whatever item is the lowest of your Fabulous 4 block. Once we have the upper part and the lower part, we extend into the future. Boom, just like this. And this becomes my Fabulous 4 rectangle or block. Now that I have my fabulous 4, notice that Pepsi opens under the whole fabulous 4, but it opens in the perfect location. It opens in the best location. It opens in the highest probability location. It opens in the juiciest location. That location, remember, is right under the Fab 4. So remember, right under the Fab 4 is the very best location for betting down. Down here is okay to continue betting down. Down here is best probably betting up. Okay? Remember those locations. All right? So let's grab that Fab 4 again. Let me show you. We're going to grab the 200, grab the 20, grab yesterday's closing price. That's 3 items. We're going to grab the top of yesterday's late day data, about 45 minutes. We're going to grab the absolute bottom of yesterday's late day data. Now, what's my highest line? Out of all of these lines, what's my highest? This one. I'm going to extend that into the future. Now, what's my lowest line? This one. I'm going to extend that into the future. And this gives me my fabulous 4 block. Now, I want you to understand that I teach my traders to do this before the market opens. So this hasn't happened yet. Let me show you. This hasn't happened yet. None of this has happened yet. You see? We know the Fab 4 before the market opens. Now we're waiting. So when Pepsi opens for its first bar right here, check this out. Pepsi opens right here and gives me a red bar in the perfect location just under the Fab 4. I'm gonna bet to the downside. Boom. If Pepsi opens right here in the perfect location above the Fab 4, I am going to bet to the upside with a long. If Pepsi opens right here in the Fab 4 in the trap zone, I am going to do nothing. You see? If Pepsi opens here with a red bar, I will bet to the downside. You see? If Pepsi opens down here but with a green bar, I am going to bet to the upside. Position 1, position 2, position 3. Wow. Knowing what to do in each of these positions organizes your trading, simplifies simplifies one of the most difficult questions in the market. Do I buy or do I short? Do I bet to the upside, or are the better odds to bet to the downside? Locations are the answer. The better odds from 3 is to bet to the upside. The better odds from 1 and 2 is to bet to the downside, although sometimes from 2 you can bet to the upside. This is extraordinarily powerful. Now, let's go on to another example, okay? Now, we're looking at a 2-minute chart here of GIL. Every bar represents 2 minutes of chart, 2 minutes of trading. Remember, this really doesn't exist yet. So let me get rid of that for you, right? This doesn't exist yet. We don't have this data yet. This hasn't happened yet. So I'm going to get that off the screen. Okay. And this is 5 minutes, 10 minutes before the open. All right. So what you're going to do, you're going to say before the market opens, whether you trade the Bovespa, whether you trade the dollar, I don't care what you trade. It's the same thing. You're going to grab the 4 items in advance of the open. You're going to say, okay, where is my 200 right there? That's item 1. Where is my 20-period moving average right here? Item number 2. Where was yesterday's closing price? Right here. Item number 3. Now, where was the highest price of the last 45 minutes? Right here. Where was the lowest price of the last 45 minutes? Right here. Now, out of all of these lines, what's the top line? Right here. Boom. Extend into the future. What's the lowest line? Right here. Extend into the future. Now, this becomes your Fabulous 4 block. If your stock opens above the Fabulous 4, you know what to do. If your stock opens below the Fabulous 4, you know what to do. Okay? Now, we're still talking generally, but this is the foundation for proper trading, getting the location right. Then if we add the technique in the right location, oh my God. Woo! That's where the power comes. Okay? Now, we've got, let's move forward. We have the 4 items. We've blocked the 4 items out. We extend into the future. And remember, this didn't, we do this before the market opens. The market opens and gives us the right color in the right location. Wow. Eventually, it moved up here a little bit, but remember I told you it's hard for a stock to penetrate the Fabulous 4 zone. So I'm not nervous if it bounces up in there a little bit, as long as it doesn't break the Fabulous 4 zone. Okay? Now, you get the greatest flows from just under the Fab 4. Beautiful. Beautiful. Okay? Again, if this stock opened here and gave you the right color, you'd be betting that way. But it opened here and gave you the right color. So you're going to bet this way. Now, here's something else my traders are taught. They're taught to play the color game. The color game is very simple. It's if you're under the Fab 4, you're going to play. You can play or enter anytime red eliminates the color green. Boom. Boom. You see this green? Red eliminates the low of this green right there. Boom. So we've got 2 very fascinating entry points. Red eliminates the low of the color green right there. Red eliminates the low of the color green right there. Now, you can look at this. Red eliminates this green, but I don't like this one too much because it's happening too far away from the 20. It doesn't have to be touching, but I like them when they're a little closer to the 20, a little closer to the 20. So for instance, if this red dropped below the green here, I wouldn't take it because it's too far from the 20. All right? So the way this trade would go with my traders is boom, entry 1, boom, entry 2, boom, entry 3. And where would they take profits? A move away from the 20-period moving average is profit taking. A move away from the 20-period moving average is profit taking. You see, because stocks can get far away from the 20, they can't stay far away. They can get far away, they can't stay far away. So we look to get in near the 20 and get out away from the 20. Get in near the 20, get out away from the 20. Get in near the 20, get out away from the 20. Okay? That's the game after the initial play. Initial play, secondary play, third play, profit take, done. You're now off to the beach. Do you understand this? Are you getting this? Do you know how to grab that Fab 4 with the 4 items? Do you know the different locations above the Fab 4 and the different locations below the Fab 4? Do you get this color game after your initial entry? Now just play colors, boys and girls, red bars and green bars, yay! This game of trading is not as complex as a lot of people make it out to be. This game of trading is made complex by you. The market is a very basic, rudimentary item. It goes up, it goes down, it goes sideways sometimes. That's not complex. You're complex. And you bring your complexity to the game. The game is not complex. The game, in fact, is simple. I'm not saying it's easy. That's the last thing I will promise you. The last thing I will tell you. It's not easy, but it's simple. Simple is different from easy. Just like basketball. Basketball is a simple thing. Get this ball in that hoop. Oh, that's it? And prevent the other team from getting the ball in their hoop. That's it. That's the game. Simple. Easy? No. But the rudimentary elements of the game are simple. You can dramatically increase the odds of your plays if you get the locations right and you match the colors. So above the Fab 4, you want, boom, solid green. Below the Fab 4, boom, you want solid red. And then after your initial entry, it's just a color game. Getting in near the 20, getting out away from the 20, getting in near the 20, getting out away from the 20. And you've got a basic approach that will dramatically raise your level of consistency because you will be playing with the flow, with the power in the right location. Now, let's get back. I love this. I hope you love it too. All right. All right. Let's look at some examples from yesterday. When I give presentations, traders, I try to grab from the current day, which we can't do it Saturday, or if I can't do it the current day, I draw from the previous day. So in this case, I just grabbed trades that my traders took Friday in the market, hundreds of them. Because they're taught the same techniques, and many of them trade the same stocks. So on any given play, I might have 300 traders do the same play, with different sizes, of course. But anyway, so here's a play that was done in Target. This is Friday, April 16th, okay? It's a 2-minute chart. Now, I want you to note that this part of the chart is yesterday. Is the 15th. This is the day before. Okay? All right, just so you know. Now, we've got the 20-period moving average, the 200. Now, let's go grab our Fab 4. What's the first item on our list to grab the Fab 4? The 200. Where is it? Right here. Now, remember, traders, we don't have this. This doesn't exist yet. We need to grab the Fab 4 before the market opens. Don't wait for the market open. We can do this before the market opens. So remember, this doesn't exist. It looks like that. Now, so we've grabbed the 200. Let's do that black again. We grabbed the 200. What's item number 2? Here's the 20 right there. Where's item number 3? The prior day's close right there. And where's item number 4? The last 45 minutes or so. What's the lowest item of the let's say I'd like to go, that's going back a little too far. Let's use this. What's the last 30 minutes, last 45 minutes? That's the lowest item. That's the lowest price in the last 45 minutes or so. And this is the highest price of the last 45 minutes or so. Now, of all these lines, where's the top? Right here. Let's extend into the future. Where's the bottom? The 200. Let's extend into the future. This becomes our fabulous 4 zone. Now we are in business, traders. If the market opens here, we know exactly what to do. We're going to Mars. All right? It's like Dogecoin did the last few days. Wow. Okay. If we open here, we know what to do. Okay? Now, I want to talk right now about color matching. The best scenario is when you open above the Fab 4, you want the first bar to be green. That's called a match. You are matching the positive location with a positive bar. We've got a match, but sometimes you don't get that. Sometimes you get a mismatch. Do you understand? Sometimes you get a mismatch. You get the first bar. The bar, it opens above the Fab 4, but the first bar is red. What do? Nothing. We don't play mismatches. All right? So we would have to wait. When we have red, we have to wait for green to take out the high of red. Then we go boom in that beautiful location. But if that doesn't happen and the stock continues to drop, what do? Nothing. That's just not a play. So I need you to understand this, all right? This color matching. If we get a match, it's simple. Buy the match or buy above the match. Either one is okay. Buy into the match if it's strong. Buy right above the match as well, if you like. But if you have a mismatch, you do nothing unless the market eliminates the mismatch. Boom! It eliminated the mismatch right there. Very powerful. At the bottom, if we open under the Fab 4, we have a match. You can go into the match as a short or go under the match if you like. They're both fine. But if you have a mismatch, you do nothing. Do you understand? If the first bar under is a mismatch, you're under the Fab 4, but it's a bullish bar, you do nothing unless that bullish bar is removed. Boom! I go in right there on the removal. It's important to understand this. Now, let's take a look at what Target did. I had like 200 some odd traders do this. Look at the first bar. We've got our Fab 4 traders. We've got our Fab 4, powerful. Fab 4 extended into the future. The first bar opens up right in the beautiful location, but the first bar is not bullish. It's not green. What do? We do nothing. Now remember, to make this really clear, I'm going to erase this once again. I want you to understand that this is the only thing you're seeing right now. All right? You're not seeing anything else, right? You're seeing that first bar right there, and you're like, oh, okay. But you're saying this is either going to be no trade or green is going to take out the high of this bar. And if it does, I'm going to be waiting right here. Look, this is you waiting right here. Look, let me draw you right there. You're waiting. You're ready to go, buddy. You see that? You're ready to go, right? Ready? You're ready to go. Boom! Right there. What happens? You know. Boom! I love it. You dive into that bar. You don't wait for that bar to finish trading. You dive into it the moment, the second, the nanosecond it clears that high. Boom! I get that question all the time. Oliver, do I wait for this bar to finish trading? The bar that removes the problem? No! Just jump right into the bar. One penny. The second it crosses, boom, no waiting, no hesitating, no guessing, no calling up mom, what should I do? No calling up the psychic hotline, just hit the freaking buy button and get in. Now, where do you protect yourself? I teach my traders, protect yourself under every bar that you buy. The very reason you buy should not be removed. Don't let the market remove the reason you got in. This bar is the reason I get in. Now protect myself under the reason. If the market removes my reason, I'm out. So look, my risk is going to be, I'm going to be entering right there. My risk is here. This is my risk unit. I'm going to lose that amount, but look at my potential. Wow, that's what I call the snowman effect. You see? When you play the snowman effect properly, you will be a very profitable trader and you will stay in this game a long time. Now, let's draw the snowman one. I used to do this when I was a kid, you know, put some Oreo cookies into this white snow, get some twigs from the tree. Right, put a little hat on him right there. You know what I'm saying? Used to do a little carrot for its nose. Steal a carrot from the refrigerator. Get an old pair of boots of mine that no longer fit. You know what I'm saying? Boom! So the head of the snowman is your loss. So you always lose the head, but you gain the Oreo cookies. Yeah, Oreo cookies. Yeah. You see what I'm saying? Do this. Play the market this way where you're always losing the head and gaining the body, and just math will take care of yourself. Math will take care of you. All right? Knowing your risk unit in comparison to the potential gain. Very powerful. All right, beautiful. Now, I want to mention to you guys, I'm almost out of time. No. Please tell me, Ari, please tell me I can go on a little bit further. I know my hour's almost up, but I've got so much more. I got a little bit more to share, I should say. All right, let me know. Text me. All right, so there's something I want to show you here. This is very powerful, guys. Notice how your stock on the left, your 20 and your 200 are very close. You see how close they are together? Wow, that's called a narrow state. From narrow states, stocks explode explode out of narrow states. But notice how now you're wide state. You see your wide state? All right. That wide state means that it's over. Don't expect a lot more upside after you've gone from narrow to wide. This is a big mistake made by a lot of traders. They don't know when to call it quits. They don't know when the odds have dropped. The odds have dropped that upside is possible. It's not impossible. It's just not probable. But from here, oh my God, narrow state, wide state. Learn to read your states. Okay? When a stock is starting off the day from a narrow state, I start salivating. And the stock opens just above my narrow state, oh my God, I salivate more. And then boom, protection, risk unit. Remember, when do you take profits? Away from the 20-period moving average. What can you do after? Play the color game. Didn't I explain that after your initial buy, you can play the color game? When does green eliminate red? Right here. Boom! When does green eliminate red? Right here. Boom! When do you take profits? Away. So you got here, boom, away, take profits. Back in, color game, boom, away, take profits. Back in, color game, away, take profits. Repeat, 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 repeat. Let me know if I can keep going here. I love this. Are you following this, guys? Powerful, simple. Most things in the market, most powerful things are simple. I've always said, look, if you can't explain your whole trading plan to a 12-year-old and they understand it, you're making the game too complex. Your whole trading approach, a 12-year-old should understand and say, oh yeah, I get that. And if you're 12-year-old, or if a 12-year-old can't understand it, you're like, okay, when the planetary alignments happen like this, and this line crosses that line, and Saturn is in its orbit, and the fifth moon of Uranus is da 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 da. That's garbage, right? That stuff rarely works. Remember, the markets are simple. Market goes up, goes down, sideways. You know what's complex, all right? My Tesla's complex. Do you know how many moving frickin' parts? What makes that thing go faster than almost any other car on the planet? That's complex. The market, up, down, sideways. It doesn't even have another choice. What makes playing the market appear to be complex is you. You bring your doubts to the market. You bring your lack of discipline to the market, the lack of a plan, the lack of proper education and training, the lack of the proper amount of money. You can ruin everything by trying to play with a little bit of money, showing up to a gunfight with a knife, thinking you have a chance. All of these things you bring to the market. And of course, it's complex when you bring lack of discipline, no plan, no technique. You don't know things like location. You don't have the proper amount of money. You're just stacking complexity on top of something that is not complex. Up, down, sideways, up, down, sideways. Cut my loss under my entry bar, right? Take profits away from the 20-period moving average, all right? The best position to buy is right above the Fab 4. The best position to short is right below the Fab 4. Color matches. If I don't have a color match, I have to wait for something to eliminate the problem. I take profits away. I play the color game after I initially get it. I mean, a 12-year-old can understand this. Do you understand what I'm saying? Simple, but very, very powerful. All right, yeah. All right, do I have a little bit more time to keep going? That's what I'm trying to figure out here. She's like, you rocked. I always rock. I just want to know if I can keep rocking. All right. All right, guys, let me just try. I want to do one more thing with you here, though, if I can. One more. Let's do one on the downside. All right. So this was a beautiful one on the downside, right? And then I'll wrap things up. Okay. But check this out. Let's take this is Peloton. All right. This was a very popular one. We had something like 400 traders take this play. Huge. Now let's go over everything we know. Let's grab the Fab 4. All right. Okay, let's grab the Fab 4. My time is up. We're going to finish this one and I'm done. We're going to grab the 200. We're going to grab the 20. We're going to grab yesterday's closing price and grab the highest price and the lowest price of the last 45 minutes. Here's the bottom line. Here's the top line. Here's my Fab 4. Now, what my traders did was short into this bar, boom, and then play the color. Remember, stop above your entry bar, then play the color game. See that green bar? It gets eliminated here. Boom, add. See that green bar? The green bar gets eliminated there. Boom, add. All right. When are they taking profits? Away from the 20-period moving average. Away from the 20-period moving average. Boom. Simple. Location and color game. Traders, you can do this. If you are interested, traders, in learning more about what I do with traders and how I build them from the ground up and how I fund traders, because most people don't have the proper amount of money, so I fund them, I want you to contact my team. All right? I have an entire Latin team. If you speak Spanish, I do everything in Spanish, everything in English, and everything in Portuguese as well. This is my LATAM team, all right? You can contact any person there, all right? Here is my Brazilian team, Ariana, the beautiful Ariana, and Thiago, beautiful. Thiago's been translating for me today, all right? There's their contact. Guys, you can do this. I have programs for everyone, and you can stop wasting your money and your time trying to figure this out, because that's a very expensive route. You'll spend way more money trying to figure things out on your own than going straight to what works and starting there with the proper amount of capital. I want to thank the organizers of this event for inviting me to be their keynote speaker. Every single time I'm afforded the opportunity to grab a mic and speak to you, I do my very best to try to deliver something of value that potentially can change your trading life forever. I hope I've done that here today. Thank you for your time. Thank you for your trust. Thank you for attending, traders. Ciao for now. Boom! Thank you. Woo! Thank you so much. I'm seeing your comments. Wow, wow, wow. Thank you. Ciao for now, guys. Ciao.